So you mentioned the red dog reversal. It's actually a strategy. There are some other names for it. You can't take full credit for it, but it's something that every day on Twitter I feel like you get a few questions. When you mention red dog reversal, people say, oh, what's the red dog reversal, this and that. And it's something that is very prevalent in your analysis and in your activities in the markets. Could you just go a little bit more into depth about what the red dog reversal is, how you follow up on red dog reversals, and just the origins of that strategy?
The origins. First, it was called the Big Red, and that was when I was a bartender in high school.
I guess we got to start off with the nickname before we get into the strategy.
The Big Red, my last name is Redler, so some girls would come up to the bar and they'd say, listen, I want something fruity and fun. So, I would make a drink. I called it the Big Red. And all it was a little vodka, a little sour mix, a little Gran Adina. It looked pretty, and this way I always had a drink, and they wound up liking it. And then I used to go to other bars, and people would order the Big Red. They had no idea what they were talking about, because obviously I wasn't bartending then. So
anyway, there was no Twitter then.
Right, there was no Twitter, so you couldn't get the grassroots attention on some kind of great, fabulous drink like that. So anyway, with the red dog reversal, all it is it's a reversal pattern. So I wanted to name it something fun. Some people call it a hanging tail bottom. Some people call it an outside day. It could be that. So really, it's a way to get involved with the plan. It's a way to get a calculated entry with a stop, so you know what your risk is. And the beauty of it is you could do it on every time frame. Sometimes a red dog reversal is a major market inflection, like we saw in November in 2012 heading into this year, like we've seen multiple times along this trend. And sometimes it's just, every few days you could use it on a small time frame just to know when something you might want to take some profits in. It's also a way to pick a top or a short-term complexion change. May 22nd, we had an outside day red dog reversal this year, and that led to our first little setback in the market, which we had like 5–6% to the downside. That could have been a time when intermediate guys that don't trade every day said, you know what, I'm going to take a little risk off here because, this is a pattern that makes you think that it could be a day to take notice, and why not? We just had a major run. So with that said, it's a pattern you can use on multiple time frames. It's a way to define your risk. It's a way to trade a level versus a level at an inflection point. It's a way to feel comfortable getting your entry and even an exit, a way to get short, a way to get long. It's just a really good technique that once you kind of master it, it can make you quick cash flow, and sometimes it could lead to multi-month or multi-year moves.